Welcome back to the Decarb Connect podcast. And this episode is actually the first of what I'm hoping is going to be at least 3 discussions over the next couple of months, which are really going to look at the impact of the energy crisis on energy transition and decarbonisation for industrials. And today I'm joined by someone who's been here before. So some of you may know him, some of you may not. His name is Ben Moens. He's Managing Director of Sustainability Solutions for Engie Impact, part of the bigger Engie organisation. And Ben, why don't you just, for those who haven't met you or haven't heard the previous podcast we did, why don't you give a little intro to you and how you've arrived at this kind of point in time working on these issues?
Hello, Alex. Yeah, thank you for having me back on the podcast. So, indeed, as you know, Engie Impact, we are a global organization as part of the Engie Group, who has a single purpose, and that's helping our clients reduce greenhouse gas emissions. So, from that role, of course, we have privileged insights into how companies are preparing for the energy transition, how they ramp up for it, scale up, how they try to reduce. Remove hurdles for getting it actually done. And yeah, from that position, we've seen front row how the energy crisis is hitting some of our clients, both large industrials, but also companies in other spheres of the economy. And yeah, glad to be on your show today to share some of on these viewpoints.
It's this whole issue and discussion around energy crisis. It's an interesting one, I think, because it's not as straightforward as it's all bad, is it? It's sort of layering on top of some issues that were already there. It also opens up perhaps some different opportunities in different ways. But for you, when you think about the conversations you have with clients, like what's the tone of it that you're hearing, and what sorts of things are coming up when they're really kind of discussing like impact of energy crisis? What are you hearing?
Yeah. So I think one first observation is that before the crisis, obviously, I mean, as I explained, as Engie Impact, we work on climate action. So we were a bit, had a singular focus, I would say, on just one of the 3 key dimensions in the famous energy trilemma. So just to remind you, there's of course there's sustainability as one of these 3, but next to that you also have security of supply and affordability. And most of our conversations we were having on how could you scale up some of the proven technologies, the best available technologies to decarbonize, technologies that were in a way proven from an affordability standpoint, and all of the attention was on that. And so what we're now seeing is that there's definitely this painful reminder that we should make a trade-off between these 3 dimensions. And for sure now on the short term, all focus with industrials is on security of supply, on affordability. And so it's interesting, from our perspective as Engie Impact, to also change a bit our perspective of how we should organize for this energy transition and how we can accommodate these short-term concerns on security and supply and affordability, and still make sure that companies keep the right progress on the energy transition and eventually hitting their 2030 emission targets.
I don't know about you. I sort of have been asked quite a lot by both friends, but also people in the sector, is this going to mean that people back away from transition? Are they going to back away from decarbonisation? And I suppose there must be some companies for whom that is the decision. But I have to say, most of our members and a lot of people we talk to, it's not really making them stop their work. But I wondered again, like, what do you make of that? That common question of, will this put an end to decarbonisation in some way? What's your sense of that?
Well, I think for sure, again, there will be a short-term negative impact. You see, companies are switching to all sorts of alternatives. You have the ones that are using now more fuel oil and boilers. You have increased use of diesel generators. For instance, for data centers, we see that happening a lot. There's even companies are installing propane tanks. So, on that basis, this is clearly like from the industrial sector. We do see that there will be a short-term impact and switch back to oil or oil derivatives, and as long as we have this price gap between the LNG prices and these oil prices, you will see that happening. And I think on that basis, I mean, there's even estimates for that. If you look at the estimates for oil demand and increased, let's say, liquids demand from industrials, they're expecting about 600,000 barrels per day increased demand in the first quarter of 2023. So that is significant, and that's definitely a temporary setback. That we, by the way, we also seen in the power generation sector, but there more the alternative now is coal. So we've seen already in 21, by the way, that there was an increase of a double-digit increase in coal consumption. In 2022, that trend will unfortunately continue. So it looks like we're back, to the record levels that we had almost a decade ago in 2013 in terms of coal consumption. So for sure, yeah, needless to say, this has a negative impact, has a bump on the road. But I do assume that all of this will be temporary, and it's just a matter of time, before speaking up for Europe, for instance, that we have the new LNG supplies coming in somewhere in the time frame 2024-26. That part of this will recover. So I think, yeah, it just means that in the second half of this decade, we'll have to find ways to accelerate more. And that's definitely a key aspect to take into account. I think an interesting discussion maybe to have then, looking at the bigger picture, is indeed the role of nuclear. It's a very controversial one, but it's maybe good to just remind ourselves that if you look at the current installed base of nuclear, and that's roughly globally about 450 reactors. I think 40% of that was built actually as a response to the previous crisis we had in the 70s. So building on that, we also see now that again in Europe, some countries are taking decisions to postpone the closure of some reactors. Even Germany is carrying over some of this closure over the winter time. Belgium has just decided to prolong for 10 more years. There are 2 remaining reactors that were set to close in 2025. So you see that's a temporary effect. But next to that, I feel there's also, in general, still a couple of countries that believe that nuclear is the right way to go. You have, for the moment, about 30 countries that are actually considering, planning, or preparing a build out of nuclear. And among those, you see that there are a couple of countries in Europe. There's notably, of course, France, UK, there's Poland, Estonia. We know that the Netherlands is investigating new nuclear reactors as well. So I think that might set something in motion where the role of nuclear in decarbonization scenarios may be revisited.
Yeah, on the modular reactors, our membership spans all types of hard-to-abate industries, so it's not just one in particular, but there's definitely been more curiosity about it. I don't know that I would say that I've heard people really sort of already planning to get it into the mix, but curiosity has certainly increased over the last kind of 6 to 8 months about what role that could play.
Yeah, absolutely. And if you look at their planning cycles, a lot of sectors are just one asset planning cycle away from 2050, actually. So it is normal that they're reflecting on the potential role of this, even though we know that before 2030 you won't see any commercial scale of deployment. But I think it's especially the premium that will now be put on the security of supply on as well. It has fairly. We have to see in terms of economics how it will play out. I wouldn't say they're predictable, but at least there's value in having potentially on-site solutions like this, where you also less dependent on a grid to get the renewable electricity and heat to your site. So remains to be seen. And indeed, I think from an industrial side, like I say, there's definitely now a much higher interest, and companies are willing to move into a kind of planning and feasibility stage around these technologies.
And coming back to the natural gas price itself, I mean, again, it's not as easy to just say that it's all bad. There are some, I guess, possibilities. I know you'd mentioned in our prep call the possibility of this may be pushing more energy market reform, even, again, not necessarily a short-term win for everyone looking at costs this winter, but can you speak a little more to that? Like, what do you think one of the consequences of this price rise could be that might have a more positive outcome ultimately?
So, of course, it's very hard to say something sensible about the price evolution. I wouldn't dare to do that, but I think there's a bit of a general idea that indeed this situation will, at least for Europe again, will only get solved somewhere by 2025 as new supplies come in, and as of course takes the supply chain time to ramp up to alleviate now these constraints. It's already an interesting question. Like, okay, how as a business you make your business cases for these investments? How do you price carbon in those? And there indeed, I think we can have a discussion on the gas versus the electricity market. We all know that the electricity market, first of all, is pricing carbon, at least in Europe, is also highly driven by the most expensive generation asset, which happens to be, of course, gas-based power plants. So in that sense, there's a big discrepancy between the electricity pricing and the gas pricing today, and you see now voices being expressed that maybe it's a good time to start rethinking this market framework and make sure that we have a better decoupling of that electricity price from the gas price, and that we also finally get rid of this bias of carbon pricing that we only see in the electricity prices. And that there, I think there's already some where companies can take a bit of a maybe proactive stance in potential future regulatory change and start to price that carbon directly, even if it's using gas directly as an input or even as a feedstock. Just start to price that and make sure that the decisions you take and the investments you make are in that sense sufficiently future-proof. And I would say just maybe a last thing on, fundamentally, I don't think it changes anything to the energy transition, because let's not forget, a big part of the energy transition is actually about substituting capital for fuel. If you look at all of the solution, renewable electricity, electrification, on-site generation options, like for instance, biomethane, if you have a certain waste product flow. All of this is allowing companies to get much more predictable economics because it's based on capex and not on a fuel you buy. And I think in general, this crisis has just made that basic notion of the energy transition a lot more attractive. So in that sense, I think this crisis is only helping in that sense to make the business cases clear for the energy transition.
That's something we've seen obviously in the last, 6 months or so is an increased level of regulatory responses, and particularly in the US. What's your kind of sense of how those play out in this kind of slightly more intense environment and the energy crisis? So, both the EU's policy push, the US. What's your sense of how that will either help or does it help? I don't know.
Yeah. Well, I think we have to distinguish two things. There's of course some short-term measures being taken. Again, in the EU, we see a lot of around pushing for more energy efficiency measures. There's of course the question of taking a grab of windfall taxes. Actually using windfall taxes to redistribute some of the exceptional profits now to where we need that money to bring relief to the rest of the energy sector. There's a solidarity contribution expected from the oil and gas sector. So I think that is something that is, I think, helpful to weather the crisis on the short term. We're talking big amounts. I think the EU and Britain together, they're probably setting aside 500 billion to support the energy sector. So that's not small money, and we're really talking about easily 1 to 3% of GDP being put aside to help on the short term. So I think that is significant. I think it's important because we should also not forget a lot of these utility companies. They've went already through a major crisis in the beginning of the past decade. Maybe we forgot, but don't remember that. Don't forget that actually around 2010 and the years after. A lot of the utility companies had to take massive write-offs on exactly their gas power plants because they were just pushed out of the market, and they were, most of them were actually, it's maybe a bit ironic, but we're operating on an oil indexed gas contract, and they were simply being pushed out of the market by all of this spot purchases of excess gas being delivered to Europe. So it's I think it's good in general that there's a support for the sector. We also have to be careful that it doesn't go too far, and I think especially now some initiatives that we see in terms of price caps are a bit tricky. So we know that particularly for renewables and nuclear, a lot of countries are looking at the price caps. You had, for instance, Spain that very clearly also putting a price cap on electricity coming out of gas power plants. So I think we have to be careful that we're not doing too much regulatory intervention at that point, because it's a reality that it undermines investor confidence, and it only takes the next crisis to take again additional measures, and this is not good, to create the right investment climate. And now, of course, the last thing about the regulatory intervention is things like the Repower EU plan or the US Inflation Reduction Act. These on itself do not necessarily change the direction of travel, but are helpful because I think they bolster the ambitions for 2030, and they mobilize more resources to support the necessary investments. And I think it's definitely positive, and that EU, for instance, is expanding its renewable targets, from 40 to 45% by 2030, doubling biomethane, pushing on hydrogen, and actually tripling the target of hydrogen being available in Europe, and also recognizing the need, for instance, for hydrogen imports to Europe. So I think that's all positive, but in the end, will probably only help again in the second half of this decade, and I don't really seeing that any short-term relief soon.
Well, as much as the industrials obviously do look for some kind of security of government intervention, I was interested when we were in the prep stage for this, that you were seeing from your clients actually a kind of equal or perhaps even more of a push for self-sufficiency, and this idea of how they can really develop and how they're putting a premium on self-sufficient solutions. Perhaps you could speak to that a bit more, because I think this is a really interesting point, and I think we've been hearing about projects that are associated this within our membership, but I didn't really understand that this was the concept that they were all part of. So could you tell us a bit about that?
Yeah, sure. So I think when you think of the typical levers to decarbonize, there are indeed some solutions that in the current context, have the impulse from the business case side, but are also just the solutions that also can help you increase your security of supply. And notably, which ones are those? I think first of all, of course, there's energy efficiency. That's in any context a good thing to do. But there, I think the current crisis is really helping corporates to just accelerate and really change their investment approach to it. There's first of all, their ability to put lower thresholds. There's of course the current gas prices that are helping the business cases, but I think that corporates, on energy efficiency, also change their investment approach in general, and just be open to more innovative financing and contracting models, and maybe allow a greater role for third parties to come in and help them drive these savings, maybe even doing the investments on behalf of the company. And in the end, help as a third party to mobilize resources on bigger scale. Because on energy efficiency, I still observe that companies are trying to do that too much as a bottom-up, side-by-side continuous improvement type of approach. I think they just need to be much more radical and much more top-down in structuring this, making it more programmatic, more repeatable, and just avoid that you try to do things perfect, but they take double the time. So on energy efficiency, my message would be truly to find models to scale up more rapidly, and every year you're implementing it sooner, it will flow directly into your bottom line. But then next to that, you have indeed, I think a second category is is on-site renewables. If you think I've read somewhere a study that actually, if you look at current hedges, the price of these hedges are sometimes even higher than the levelized cost of electricity of renewable projects. So, I mean, it's very easy to make the case to double down on on-site renewables. The fact that you, of course, own your renewable assets, that's also improving in general, also your long-term price security. And there again, I think it's a question of how can you really scale that up more quickly. It's in a way a bit of a challenging time as well, because we see it in terms of supply chains of renewables. It is more complicated than it used to be. As well that there's still the pandemic is disrupting supply chains, for instance, from China, and there is some supply concerns about solar panels and the like, and also of course Ukraine war is also not helping, because we know that a lot of the steel, the copper, nickel, silicon are all coming from these regions. So it's also not to be underestimated what impact that has on the complete renewables supply chain. But regardless, I think we've seen that those had an impact on the cost of renewables. And I think it's for the first time in the past decades that we've seen now an increase in the price of renewables and the cost of renewables. So, but that should not scare companies to move forward on it. I think it's still the right context to definitely invest in on-site renewables, and indeed, for offsite renewables, it's a little bit more challenging market for the moment. I think both on the developer side, you see that it's some hesitation sometimes to enter into these long-term contracts, and also for off-takers. It's a very difficult environment right now to agree on a fixed price PPA for 10 to 15 years. I totally get that. So I would say favor on-site solutions where you can. And then I think on the off-site renewables, it's more a matter of being a bit more creative, perhaps, on the contracting, and find novel ways in dealing with these price uncertainties. But renewables will remain for sure, and definitely on-site renewables today is an area where you need to double down.
But for what it's worth, again, if I kind of reflect on what we hear from the members, it's that on-site renewables has sort of become a lot more interesting as the renewable energy storage solutions have also become more real, and we're seeing more. A good handful of our members are now testing various kind of renewable storage solutions of different types, which is just making it a lot more appetizing and a lot more kind of, consistent and reliable as a source for them too.
Yeah, absolutely. I think on the theme of storage, I think a bit related to that, two other technologies that we now see actually an increasing momentum is, of course, first of all, electrification. I think there the industrial heat pumps are proving its value. Of course, you need to see for what applications you can use them, and it's definitely not a total solution. But typically, in your processes, you have some areas where they can be of good value, especially if you indeed combine them with an energy efficiency program. And if you combine them indeed with your on-site renewable sourcing project. So, but again, there we see that supply chains are again not able to completely cope with demand, and you had, of course, the volatile raw material prices also impacting these supply chains. There's indeed shortages of copper and silver and the like. So, but right now I would say engage definitely with industrial heat pump manufacturers and a bit secure your program, for the coming years, and avoid that you end up at the end of the queue, so that you literally end up the end of the decade to scale up this technology. But then electrification, so indeed it can be combined with, for instance, thermal storage, and there's some good use of that. In that sense, I also want to mention, maybe a bit of a less well well-known technology, but again, we see in the current crisis some increasing momentum, and that's on solar thermal. So could be use of flat plates or parabolic troughs, doesn't matter, but it's a technology that was used already quite a bit in the context of district heating. But now we see more and more industrials that are adopting that as part of their decarbonization pathways. Yeah, I think it's proving, in a lot of countries to be a affordable solution, especially, in countries where there's also very often very good regulatory support with subsidy schemes. And again, I think in the EU, there's a clear push now to have more and more capex subsidies for solar thermal. So as an industrial, I would also recommend to start looking into these solutions. And even though they will play only part of the solution mix, it is the right time to investigate them.
So let's move into looking at some other solutions that people have been looking at. Your thoughts on the kind of biomethane and associated products? What's your sense of their role, given the context that we're talking about?
Yeah, so for instance, biomethane, like I said, the EU is doubling its ambition towards 2030. Personally, I see a lot of projects I'm doing. We truly see a good potential to put biomethane in the mix, and both on-site solutions, but equally off-site produced biomethane that is eventually put on the grid and made available for industrials. So we see that in a lot of cases, even without subsidies, that is one of the more affordable ways to go. I'm not saying definitely not cheaper than natural gas in the normal market context, but we see that in the current context, biomethane is we assume that can be produced somewhere as of 55 euros per megawatt hour. Of course, depends on the feedstock and the specific project characteristics. Can be a lot higher as well, but it's definitely in the current context cheaper than natural gas, and in that sense, definitely interesting to look at. We believe that these conditions will probably last for a couple of years, and then maybe indeed the natural gas price might just dip below that biomethane price. But again, it's one where in terms of security of supply, once you have your feedstock secured, technology is proven. You put the installation again on site, off site, doesn't matter. And at least just like you have with an offsite power purchase agreement, you have security on these economics and that price for duration of this installation. And that I think is definitely in the current context very appealing. But then just to conclude on biomethane, that's just the problem of it. The development cycle is long, 3 to 5 years for new installation. So again, it will not bring short-term relief, but it's absolutely now. We need to use this current context as the basis to accelerate its deployment. And so that we see in the second half of this decade, as of 2025, a lot more biomethane installations coming on stream. And then, yeah, next to biomethane is of course also then biomass. Biomass I find a little bit difficult. Honestly, I don't have a clear opinion on how is this crisis playing out for biomass. What we observe is that again, feedstock price for biomass are also soaring and doubling in some areas. So that's definitely not helpful. But it's still making the business case for biomass attractive. So I think on biomass, I think the question is much more from a regulatory perspective. How will biomass be accepted in the future?
And then I guess sort of two of the kind of big, the hotter topics in decarbonisation have been both CCS and green hydrogen, very different routes, very different solutions. With the energy prices increasing, both of those obviously for different reasons sort of come under pressure. What's your sense of, does it affect the projects that are in play at the moment? Does it affect plans, or do you think it just affects the way that people report or assess risk on what they have in motion? What's your gut feel there?
Yeah, well, I think on green hydrogen, I think in general there we see a push for acceleration. I think from the affordability standpoint, we nothing changes. We knew that this solution would simply not be affordable before 2030, if not later. So in that sense, again, no big change. What does change though is that now that we have this push on green hydrogen, we also for the first time, indeed, an EU policy start to seeing formally recognize the need to build these import supply chains of green hydrogen. I think it means that it will be a lot harder for alternatives to come in, and I think that the true loser of the crisis is for sure blue hydrogen for obvious reasons, because it's a natural gas based, so the economics are less appealing. But there's also just the general question around CCS, where even before the crisis, we've seen that there was definitely no consensus around the role of CCS and decarbonisation, and we always have to distinguish, of course, fuel-related emissions versus process emissions. I think for process emissions, indeed, CCS is still valid to look at as a solution, as long as there's no alternative production method available that avoids these process emissions in the first place. But I think for CCS on let's say fuel related emissions, that was already hard before the crisis in terms of affordability, scalability, regulatory support. So I think with the current crisis, that outlook only worsened. So there, I would not expect any change. Really, for me, is the question. Okay, on the process emission side, what's the future of CCS? I think it's probably a little bit too early to judge that, because it would not be the first thing that industrials would tackle. And I think it's a question that we have to revisit somewhere in the second half of this decade, where we see that role for CCS.
Well, so that brings me to my last question, which is sort of the big elephant in the room when you're talking about the energy crisis at the moment. There are plenty of industrials talking about perhaps sites that will have to close for a period of time, or that may even close full stop. There are these sort of bad news bears lurking. What's your kind of gut feel about? Does the current energy crisis really force a massive change to any of these industrials, or?
Yeah, that's indeed a tough question. I think again, before the energy crisis, there was clearly already a lot of strategic reflections being made on what is the right location in the future to produce certain industrial products. And I think even before the crisis, in a way, Europe was already, if you look at it from an energy cost standpoint, of course, at a handicap. I mean, US benefited from its shale boom. You always have the Middle East that has a favorable position. There was, of course, the cheaper Russian fossil fuels as well, that we temporarily benefited from in Europe. But so I think that the trend on energy costs has not changed. I think it now just put it in a much stronger spotlight, what differences we have, and likely what differences we'll continue to have. And I think this gap in energy cost competitiveness will have widened. And in that sense, I think a lot of the debate on level playing field in Europe was focused on the cost of carbon. And that's where you have the initiatives of the carbon border adjustment mechanism and the like. I think these are very important initiatives to have, and definitely need to create that level playing field on the carbon price side. But the reality is that it won't fix the level playing field on the energy cost side. And that's where I believe that eventually I would not be surprised to see that these economics will continue to shift some of the industrial activity away from Europe. I'm thinking of especially some of these primary industrial activities like iron making, but also upstream chemical production like fertilizers, etc. that we'll see a bit of a shift going on there, out of Europe towards other regions.
Well, I think that's a good a good and thoughtful point, probably to wrap up. I think we've covered a lot of good ground there. Ben, thank you so much for coming on and for talking us through quite a few different levers that are around in this discussion. And anybody who would like to talk to Ben, we will make sure that his contact details are in the show notes. But yes, thank you once again.
Thank you very much.
Many thanks for listening to the Decarb Connect podcast. We work with clients across the industrial sectors, specifically those who are tasked with decarbonising the most energy intensive products and materials that we use every day. If you have an interest in learning more about either our members network, our reports, or our event series, do get in touch with us at decarbconnect.com. Or if you'd like to take part in the podcast, email me, Alex, at ac@decarbconnect.com. Thanks for listening.